Hello everyone. In today's video, we will compare two major companies in the contract manufacturing sector, Divis Laboratories Limited and PI Industries Ltd. Both companies have a similar business model that revolves around contract research and manufacturing, producing specialized products for other businesses rather than selling directly to consumers. However, their focus areas set them apart. Let's start with Divis Laboratories Limited. Founded in 1990, Divis Labs is a globally recognized pharmaceutical contract manufacturer. The company primarily focuses on active pharmaceutical ingredients, essential components in medicines, custom synthesis of APIs and intermediates, working with global pharma giants, nutraceuticals, producing ingredients used in dietary supplements, with 3 R&D centers and 6 multi-purpose manufacturing facilities. Divis Labs has built a reputation for delivering high-quality pharmaceutical ingredients worldwide. Next, let's look at PI Industries Limited. PI Industries is a leader in the agrochemicals industry with a strong presence in both domestic and international markets. The company operates state-of-the-art facilities in Gujarat, backed by strong research and engineering capabilities. PI Industries focuses on agri-inputs, fertilizers, and crop protection solutions, fine chemicals and polymers used in various industrial applications, contract research and manufacturing similar to Divis Labs, but tailored for agrochemicals rather than pharmaceuticals. The company has also diversified into specialty products like plant nutrients and engineering plastics, catering to industries like automobiles, electricals, and home appliances. So while both companies follow a similar contract manufacturing model, the key difference is Divis Labs specializes in pharmaceutical APIs. PI Industries focuses on agrochemicals and fertilizers. Now that we understand their business models, let's analyze their financials, growth potential, and which stock could be the better investment. Now that we understand their business models, let's dive into the financials to see how these two companies compare and which one might be the better investment. First, let's start with market capitalization, which tells us the overall size of a company. Divis Labs is significantly larger, with a market cap of Indian rupee 156,025 crore, whereas PI Industries stands at 53,550 crore Indian rupees. This indicates that Divis Labs is a well-established giant in the pharma sector, while PI Industries, though smaller, is rapidly growing in the agrochemicals industry. Now, let's check how expensive each stock is compared to its earnings by looking at the P/E ratio. Divis Labs has a high P/E ratio of 84.9, meaning investors are paying a premium for its earnings, while PI Industries has a much lower P/E of 30.2, making it the relatively cheaper stock in terms of valuation. Next, we analyze how efficiently these companies utilize their capital. The ROAS for PI Industries is 24%, significantly higher than Divis Labs' 16.5%. A higher ROAS means PI Industries is using its capital more efficiently to generate profits. A similar trend is visible in ROE, which shows how well a company generates profit relative to shareholders' equity. PI Industries leads again with 21.1% ROE, whereas Divis Labs stands at 12.2%. This suggests that PI Industries is delivering better returns to its investors in comparison. For income-seeking investors, dividend yield is another important factor. Divis Labs has a dividend yield of 0.49%, while PI Industries offers 0.42%. Both yields are relatively low, indicating that these companies prefer reinvesting their profits into business expansion rather than paying out large dividends. Divis Labs is a larger, more established company, but trades at a premium valuation. PI Industries has stronger profitability metrics with better ROAS and ROE. Divis Labs has a strong presence in pharma APIs, while PI Industries benefits from the rising demand for agrochemicals. Neither company offers a strong dividend yield, as they focus more on reinvestment for growth. So, which stock is the better pick? We'll explore growth potential, industry trends, and future outlook next. Now, let's take a deeper look at the price-to-earnings ratio trends over the last 5 years for both companies. The P/E ratio helps us understand how expensive a stock is relative to its earnings, and comparing it to historical trends can indicate whether a stock is overvalued or undervalued. Starting with Divis Laboratories Limited, we can see that its PE ratio has been fluctuating but has often stayed above the median PE of 53.7. This means that Divis Labs has historically traded at a premium valuation, which could be due to its strong position in the pharma API sector and its reputation as a long-term wealth creator. However, during mid-2023, the PE ratio declined, possibly indicating concerns over growth slowing down or sector-wide headwinds. Now, moving on to PI Industries Limited, we see a steadier PE ratio trend over time. Its median PE is 47.0, and compared to Divis, it appears to be relatively more stable. The blue bars represent the TTM EPS, which is the company's earnings over the last 12 months. For PI Industries, EPS has been consistently rising, which is a positive sign, suggesting strong profitability growth. A key takeaway from this comparison is that Divis Labs has historically commanded a higher valuation, but its earnings growth has shown more fluctuations, whereas PI Industries has delivered more consistent earnings growth with a relatively moderate valuation. Now, let's analyze Divis Laboratories' growth trajectory and profitability over the last 10 years to see how well the company has performed. First, looking at compounded sales growth, Divis Labs has delivered a 12% growth over the last 10 years, which indicates a steady revenue expansion. However, over the last 5 years, this has slowed down to 10%, and in the most recent 3 years, it further dropped to 4%. The latest TTM growth shows a spike at 17%, suggesting a possible recovery in sales momentum. Now, let's check compounded profit growth, which is equally important. Over 10 years, Divis Labs has grown its profit by 8% annually, showing consistent but moderate growth. However, the last 3 years show a negative trend at -7%, indicating that recent profitability has taken a hit, likely due to rising costs or margin pressures. The TTM growth of 38% is a strong positive, but we need to see if this trend sustains in the coming years. Another key metric to focus on is operating profit margin, which tells us how efficiently the company converts revenue into profits. Historically, Divis Labs maintained OPM in the 38 to 40% range, but from 2021 onwards, it jumped above 40%. However, the latest figures show a decline to 30%, suggesting that the company might be facing margin compression due to increased expenses or pricing pressures in the pharma industry. Now, let's analyze PI Industries' growth and profitability over the last 10 years and see how it compares to Divis Labs. Starting with compounded sales growth, PI Industries has grown its revenue at an impressive 17% CAGR over 10 years, significantly higher than Divis Labs' 12%. Over the last 5 years, this accelerated to 22%, and in the most recent 3 years, it maintained a solid 19% growth rate. This suggests that PI Industries has consistently expanded its revenue base at a faster rate than Divis Labs. However, its latest TTM growth is at 10%, indicating a slight slowdown compared to previous years. Next, looking at compounded profit growth, PI Industries has shown remarkable profitability growth at 24% CAGR over 10 years, 33% over 5 years, and 32% over the last 3 years. These figures are significantly stronger than Divis Labs, whose profit growth struggled in recent years. Even the TTM profit growth for PI Industries is 19%, indicating consistent profitability expansion. Now, examining OPM, we see a clear upward trend. Back in 2013, PI Industries had an OPM of just 16%, but over the years, it steadily improved to 28% in the latest period. This means PI Industries has been able to improve operational efficiency and profitability, making it a strong performer in the agrochemical sector. Now, let's take a look at the technical analysis for Divis Laboratories and see what the charts are telling us about the stock's possible movements. One of the key patterns forming on the chart is a triangular pattern, as shown in the figure. This suggests that the stock is in a consolidation phase, where price movements are getting squeezed within a range. Typically, a breakout, either upward or downward, would indicate the next major trend. Another important observation is the RSI divergence that occurred at the top of the candles. In this case, while the price was making new highs, the RSI was showing a downward trend. This divergence signaled that momentum was weakening, leading to the current slowdown in the stock. At this stage, Divis Labs needs to break out from this channel to define its next movement. However, the RSI is currently in a neutral zone, which doesn't provide a strong directional bias. This means we could expect further consolidation within this range, or even a slight downward movement before any significant breakout occurs. Now let's analyze the technical setup for PI Industries and see where this stock is headed next. Unlike Divis Labs, which is still in a consolidation phase, PI Industries has already gone through a major correction and is now positioned for a potential upward move. One of the strongest indicators of this is the key support region around 3,270 Indian rupees. This level is significant because it aligns with both horizontal support and the 2.618 Fibonacci retracement level, which has been acting as a strong bounce-back zone for the stock. Additionally, if the stock moves towards this support region, we could see the formation of an RSI divergence, meaning while the price may be testing the support, the RSI could start moving upwards, confirming a trend reversal and an upcoming bullish movement. However, for PI Industries to turn completely bullish, it needs to break past the 200 EMA level. This level is often used by traders as a major resistance point. Breaking above it would signal strong momentum and an uptrend continuation. That wraps up our comparison between Divis Labs and PI Industries. And remember, this video is for educational purposes only. Always do your own research before making any investment decisions.